first take on the index. It looks decent at the moment. 18,000 is holding for now, up about 50 odd points.
The Nifty is quite negligible, just 2.2%.
Nifty is at that 17,908 mark.
From the day's low in the last few minutes, there has been a bit of a recovery. The sell-off at least seems to have paused.
We saw a bit of a bounce back at that 18,000 mark for the frontline index. There was dramatic recovery in the last hour.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. Indian indices close in the red despite a late pullback. Nifty drops below the 18,000 mark. Sensex loses over 300 points. Bajaj Finance slides 8% on lower than expected AUM growth for the third quarter and expectations of growth moderation, while a strong deposit growth helps RBL Bank gain 1%. Business updates from Marico and Godrej Consumer Products signal early signals of an improvement in demand. FMCG stocks rise on Q. Crude oil prices recover slightly but remain 9% lower in 2023. Expectations of a stronger supply from United States and China support despite weak demand. OMCs perk up following yesterday's sharp decline in crude prices. Tyre Stocks race ahead for the same reason, with lower rubber prices only strengthening gains. All right, well, those are all of the top stories that we're tracking this evening. Here's a lineup of what we have in store for you. It's a packed show today. Tahir Bacha of Invesco Mutual Fund and Citi's Robert Hawkins will give us their view on the markets. In Big Corporate Voices, we have Microsoft's Satya Nadella. All right, but before we get to that, here's a quick look at the day's trading action. Stocks did decline once again, with the Sensex and the Nifty ending in the red despite what was a late pullback. Sensex lost over 300 points. The Nifty has dropped below the 18,000 mark, even as blue chips and bank stocks struggled for any traction. Nigel's here with a wrap.
Well, the bulls managed to dodge the bullet today. For majority of the trading session, the Nifty was under pressure and the Nifty Bank was sulking as well. But in the final hour of trade, maybe owing to a weekly expiry, we did see a bit of a recovery. The mid-cap outperformance, though, that's something that was heartening to see. And the bulls would be pretty excited looking at that, because for bulk of the trading session, the mid-cap index outperformed and ended well in the green as well. An added kicker for the economy as well as for select sectors was that crude oil prices have corrected by close to around 10% in a couple of trading sessions. And that's good news from the economy perspective as well as for a couple of those sectors. But first up, the Nifty was under some pressure, and some of those banking and financial names, they did come in for some selling. Bajaj Finance, well, they came out with their quarterly update, and it looked pretty good by the face of it. But the street wasn't very happy that the AUM growth is only around 6% odd. That is the lowest growth that we've seen, 5.7% Q-on-Q AUM growth. It's the lowest we've seen in the past 10 years. And because of that, that was the biggest loser on the index. Bajaj Finance as well fell in sympathy. And ICICI Bank, well, that as well did see some bit of profit taking in today's session. A couple of notable winners, though, from the Nifty pack itself. There is hope that the rural economy is going to recover. So Hero MotoCorp was higher. NTPC, the management joined on CNBC-TV18. They're talking about unlocking value in their renewables portfolio. So that stock was up close to around 2%. And Big Boy ITC did see some bit of a pullback after correcting close to around 10% from the recent high. But the big story was crude oil prices correcting by 10%, which was good. And OMCs, they did buck the trend in trade today. HPCL, BPCL, IOC, all of them did pretty well. Tyre stocks, well, demand is pretty strong on ground, and now input costs are cooling off. So Tyre stocks were some of the big gainers today, Apollo, JK, as well as Balkrishna Industries. And talking about quarterly updates, well, you had RBL Bank, Marico, as well as Godrej Consumer. They came out with their quarterly updates, and the street liked it pretty much. So for the time being, the Nifty managed to defend the 17,900 odd mark on a closing basis. A good recovery is what we have seen. Let's see whether or not we can extend this on the upside.
Okay, all right, Nigel. Thanks very much for that. Well, in market opinion, we have Tahir Bacha of Invesco Mutual Fund. He says that banking and financial sectors will remain strong, and on new age companies, he said that they are off their peaks.
There were still very clear, drivers of alpha and drivers of or pockets, at least, where we could probably see alpha generation. Much of it is kind of played out in 22, and some of the incremental impulses required for alpha generation in 23 are as of now not fully visible. So I would say maybe banking, financials is some area which is on its way to discovery. I mean, it's not as low hanging a fruit as what it was probably last year. But that's one, and you probably might start looking at some parts of global sectors purely from a valuation perspective and purely from a view standpoint, such as things like technology or maybe even commodities for that matter. We have a few exposures, across some of these, new gen businesses or those which have listed in the course of the last 12, 18 months. And you're right, I mentioned this the last time as well, that, some of these are at least, obviously valuations have corrected. They still look high optically, but clearly they are significantly off their peaks. We are starting to see operational metrics improve and probably, the path to profitability becoming a little more visible. A little more nearer rather than what it was earlier. So I think it gives some confidence.
Okay, well, in more opinion than Citi's Robert Hawkins says the Fed is willing to go to great heights to fight inflation, even if it means leading to a recession.
I think what the Fed was trying to accomplish there is that they're clearly becoming uncomfortable with the level of market pricing that they've seen in recent weeks and months of underestimating how far the Fed is willing to go to bring inflation back down to target. What the Fed really wants to emphasize is that even though they have a dual mandate of employment and inflation, getting inflation back to target is job number one, and that they're willing to bear a growth cost to bring inflation down. And if that includes a recession, I think that's what's likely to happen. On the dollar side, we think you're probably near points where the dollar is not going to strengthen much further from here. You're getting closer towards the likely end of the Fed hiking cycle. We see another 100 basis points from here. And so we think the dollar is going to stay strong, probably around current levels, maybe a bit stronger in Q1, but then start to depreciate, particularly against other major developed currencies over coming quarters. So I would say the story for the dollar is that we are probably behind peak levels, and that by the end of next year, the currency will likely be a fair amount weaker, and that will allow for adjustment of other currencies, major DM and also major EM currencies to appreciate relative to the dollar.
Okay, all right, on to the second headline now. Bajaj Finance registered its biggest single-day fall in 9 months after reporting lower than expected AUM growth for the third quarter. Expectations of growth moderation also weighed on the stock. Remember, Bajaj Finance reported its third quarter business update last evening. Abhishek is here to tell us what the brokerages are making of this.
You mentioned they gave a business update wherein they mentioned that the Q3 FY23, the AUM growth is 27% on a YOY basis. However, brokerages are not happy with that. They are saying that this is below the estimate. They also say that customer addition remains strong and the number of loans booked is in line with their estimate. So it's perhaps a quarterly high in terms of number of loans booked by Bajaj Finance. However, growth sequentially, that is Q3 over Q2 in the last 10 years, this time around is the lowest ever. So festive season has not been a cheerful season for Bajaj Finance this time around when compared to last 10 years. So AUM growth is the slowest over there, just about 5.7% growth that you are seeing. So either there was a festival impact at the end of 2Q or there was some lost market share over there in Q3 is what Bajaj Finance has seen as per brokerage estimate. So brokerages do see loan growth moderating going ahead. We have Macquarie who have an underperformance rating with a target price of 5275 per share, and we also have CLSA who has a sell rating with a target price of 6000 per share. Back to you.
Okay, all right, Abhishek, but stay with us. RBL Bank was in focus as well. That one gained 2% on the back of what was strong deposit growth for the third quarter. Tell us more.
The loan growth is perhaps the best that RBL Bank has seen both YOY and quarter-on-quarter in last 3 to 4 years. And unlike peers or many other banks who are seeing a decline in CASA ratio or the low-cost deposit ratio, they have witnessed an uptick in the CASA ratio, which is at all-time high. So talking about deposit growth, YOY, it's the best growth that they are seeing in last 5 quarters, up about 11% YOY. And sequential growth of 3% is the best in last 3 quarters. The loan growth at fact, 14% YOY is the best in last 12 quarters, and about 5.8% growth that you are seeing sequentially is perhaps the best in last 15 quarters. The CD ratio or credit to deposit ratio, that's improved both YOY and quarter on quarter. In a rising interest rate scenario, if your CD ratio is improving, this would suggest that you can command a better net interest margin in the coming quarter. So CASA ratio or the low cost deposit ratio, that's an all-time high of 36.6% when compared to 36.2% in the previous quarter. Talking about MMFSL, RBI had directed the company to cease recovery process in the month of September via outsourcing arrangements. So this restrictions has been lifted with immediate effect. Now restriction has been lifted after the company updated RBI about the recovery practices and outsourcing arrangements that they have changed. They have also tightened the process of onboarding third-party agents, and they have strengthened the accountability framework as per board approval. So this has gone down well with RBI, and RBI has lifted the restrictions of recovery process for MMFSL. Back to you.
Okay, all right, Abhishek. Thanks very much for that. Well, on to the third headline today. Business updates from Marico and Godrej Consumer Products have signaled early signals of an improvement in demand. The news helped FMCG stocks rise. Manglam Malu is here with a wrap.
Well, there was resilience in the FMCG sector in today's trading session, and that's primarily because of a couple of updates that we got, and they do indicate that things are perhaps easing out for the FMCG sector. Marico, for instance, says that the India business for them grew at a mid-single-digit volume growth. This after the first half where they saw volume declines as well. Consolidated revenue for them grew in single digits, and gross and operating margins are expected to improve both year-on-year as well as quarter-on-quarter. So that would come as some bit of relief. They expect a modest growth come by in operating profit as well. Looked at it independently, these aren't numbers which would meet great shakes, but after what the sector has gone through in the first half of this year, these would come as some amelioration or some balm. They believe that, the premium personal care business witnessed double-digit growth, while Parachute did okay-ish sort of growth. Saffola franchise grew in double digit. It's the value-added business which did not do too well, and that points to some pain in rural demand already. And that is something that was mirrored by Godrej Consumer as well. They said that, this was a quarter where we saw poor rural consumption and a slowdown post the festive season. However, despite that, the three problems that Godrej Consumer had earlier was weakness in the India business, weakness in Indonesia, and some contraction in margins. All of that seemed to be, bottoming out this time around, because the India business has shown double-digit sales growth, and that coming in on the back of low single-digit volume growth, double-digit sales growth in both their home care as well as the personal care divisions. Indonesia, the business has started to see gradual recovery in performance, so that's a positive, whereas the momentum for their Africa business continues. They believe gross margins will recover this time, and all those savings they will invest back in marketing, so as a result of which EBITDA is likely to grow in high single digits. Now the question, what happens to rural economy going forward, given the weakness that we've seen in the first three quarters of this financial year? There are a few triggers out there as well. December saw some easing in inflation, and as a result of which there were green shoots of growth there, and that could be one of the bigger triggers. Higher crop realizations is the other one. There are ongoing government interventions which is going on as well. And finally, we are talking about just pre-budget conversations, so any likely stimulus coming in from the government in the union budget could also prove to be a trigger for rural economy.
Okay, all right, Manglam, thanks very much for that. Let's move on to the telecom space. Vodafone Idea promoter Kumar Manglam Birla met the telecom minister to urge the government to convert the company's license fee and spectrum dues into government equity. However, sources have said that the government is firm in its stance that if the promoters do not infuse further funds, equity conversion will not be considered. Ashmit Kumar joins in with the latest.
Well, no suggestion and no confirmation, at least coming from Kumar Manglam Birla on that, and that was in fact something that the government was seeking clarity on from Kumar Manglam Birla. Now, as you correctly pointed out, it's increasingly looking like a stalemate here. The issue has been pending consideration for over 15 months now. The issue was cleared by the cabinet back in September of 2021. Since then, the approvals have been managed by between SEBI and Finance Ministry. They granted approval by May and June of last year. The concern, however, that was raised by Kumar Manglam Birla in his meeting was to in fact nudge the government towards taking a decision on the equity conversion that has been in fact waiting for clarity. Now, the government on its part, however, has made clear a couple of reservations. Number one, they've said that it is for the promoters, in fact, to come forth and bring in more funds. And number two, it is only after that fund infusion will the government seriously begin to consider and take an action on that proposal for, in fact, converting government debt into equity. And that is something which, in fact, is holding back this entire process. As far as fund infusion itself is concerned, no commitment has come from Kumar Mangalam Birla to the DOT, to the government in terms of any timeline or any quantum of funds perhaps that can be committed towards Vodafone Idea. No clarity on that front. And therefore, this stalemate situation continues with either of the sides waiting for the other to act.
Okay, all right, Ashwit, thanks very much for that. Well, let's move on then. Let's look at the tech space. Microsoft CEO Satya Nadella tells CNBC-TV18's Shreen Ban that tech companies, including Microsoft, are not immune to the global challenges fueled by the pandemic and that the next 2 years will be challenging. Listen in.
As the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed. We have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we are not sort of immune, as I said, to the global changes. Look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? The next 2 years are probably going to be the most challenging because, after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world.
Okay, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's get to the rest of the stories that we're tracking this evening. The fourth headline today, crude oil prices have recovered slightly on expectations of stronger supply from United States and China. However, prices remain 9% lower for the year. Manisha Gupta, commodities editor, is here with the latest.
It's a bit of a pause, even slight gain in the crude oil prices today, and that is because of a slight decline in US dollar and because we had already seen 10% of a cut in crude oil prices in last two trading sessions. But the fundamentals still remain slightly on the weaker side. In this year, until now, from the 1st of January, we still have 8% of a negative return from the crude oil prices, heating oil even more at 10% down, and you have the natural gas prices, which are now down by 12% in this year alone. Markets are looking at weak economic data that we reacted to from China, and the manufacturing activity from US as well continues to be on the weaker side. It has to be about China, where we are looking at rising COVID cases and death toll as well. And then China has ensured that there are more export quota for refined oil products because the domestic demand is on the weaker side. The IMF statement talking about weaker economic growth or tough growth concerns from US, China and Europe is something that continues to weigh in as well. And then it is about supplies, especially for gas, where we are looking at most of Europe supplies for gas at around 90% of capacity, which is much higher than usually what it has at 70%. So there are enough supplies, there's not so much demand, there are mild weather forecasts for most part of January. All of that continues to weigh in case of the crude oil prices, with the belief that it would be by second half that you see the underinvestments, the improvement in demand all start to support prices, and you could perhaps look at 9,500 coming back. But for the very near term, for this month, there could be still some pressure.
Okay, all right, Manisha, thanks very much for that. And on to the fifth headline this evening. Yesterday's sharp decline in crude prices helped OMCs perk up and trade. Expectations of a better performance in the second half also supported stock prices. HPCL, BPCL and GAIL all gained over 2%. Sonal is here with more.
Thanks a lot for that. Well, yes, it's a definite positive for oil marketing companies, especially on the marketing side, because it reduces or it increases actually their marketing earnings as well. The second half of FY23 is expected to be much better in terms of their marketing segment versus first half, where they saw massive losses in this particular segment, and that would mean positive across the board as well. ICICI Securities, they put out some numbers in terms of what are they estimating in the second half. Now remember, in the first half, when I talk about massive losses in the marketing segment. IOC reported a loss of 28,000 crore rupees, BPCL 18,000 crore rupees, HPCL 16,500 crore rupees. This is just in the marketing segment. Now that crude prices have come down, this would mean that yes, it's positive also because oil marketing companies have not cut prices of retail fuel as well. So that would mean higher earnings in the second half, anywhere from around 13,000 crore rupees to 20,400 crore rupees. Now HPCL benefits the most here. It's because they have the highest EBITDA coming in from marketing segment, around 57% of its overall earnings. Additionally, HPCL is also in focus because of two updates. First, they have forayed into the petrochemicals business with pre-marketing of some brand polymers, and the HPCL Rajasthan Refinery Limited will be setting up a capacity of 9 million tons per annum. They have also signed an MOU with NTPC Green Energy Limited, and this is for foray or basically expansion into renewable energy. This would consist of energy storage projects, solar wind value chain and electric mobility as well. So some major updates coming in as far as HPCL and the other marketing companies are concerned.
Okay, all right, Sona, thanks very much for that. Well, crude's worst start since 2007, along with declining rubber prices, have helped Tyre Stocks race ahead today. Apollo Tyres, MRF and Seat also gained around 2 to 3% in today's trading session. Sonia is here with the details on the rally that we've seen in these tyre companies.
Well, thanks for that. The tyre stocks have been on the rise for two reasons. One, of course, demand is picking up across the passenger vehicle sector, but the other is the steep fall that we've seen in raw material prices. Apollo Tyres has hit a fresh 52-week high today. In fact, both crude and rubber prices have been at the lowest level that we've seen in many months now. If you track the prices, rubber prices are now down 24% from the April 2022 highs. Crude prices, as we know, are down 10% in just 2 days, which means that crude prices are now down 40% from the highs that we saw in June of last year. Now, crude and rubber together form about 70% of the raw material costs for tyres. If you break it up, just natural rubber is 50% of the operating cost for tyres, followed by which carbon black forms around 14%, and NTCF, which is nylon tyre cord fabric, forms about 12% of the cost. Both carbon black as well as the tyre cord fabric uses crude as a derivative for manufacturing, and hence there's an additional lower cost over there. Now, the margins of these tyre companies have been on the rise for a while. In fact, if you just look at the trajectory of Apollo Tyres, the margins have been rising from 11.2% in Q4 of FY22. Now it's back at about 12%, and the expectation is that margins will improve further and earnings will pick up as raw material costs subside as well as demand gathers steam.
Okay, all right, Sonia, thanks very much for that. On that note, it's a wrap on this edition of Markets Today. But before that, let's get you some opinion on the auto sector.
From 1st April, we know BS 6.2 norms coming in that will definitely push up the vehicle prices. So January, February, March will be, if OEMs gives a good schemes, then this can be a very good quarter.
On a year-on-year basis, we expect for FY24 discounting levels to be higher because stock availability will improve, which was not the case till last year.
The month of December was very good for the industry as a whole and also for our company, VCV. We are going to see good growth in the CV industry because now CV industry is on the recovery phase.